Did you know that there are people quietly becoming millionaires right now and you'd never know it just by looking at them? That's right. No flashy cars, no designer bags, no loud announcement. Just 5 boring moves repeated for years while everyone else was chasing something louder. Today, I'm breaking down the first 5 moves. The ones that quietly build that foundation nobody sees. Let's go. Number 1. Max your employer 401k match. If your job offers a 401k match and you're not taking it, you're literally leaving free money on the table. Say your employer matches 50% of your 401k. That's an instant 50% return before the market even does anything. No investment on earth guarantees that. Not stocks, not crypto, not real estate. Nothing beats a guaranteed 50%. And here's the part most people miss. This money comes out before you even see your paycheck. You never even feel it leave. Just set it and forget it. Number 2. Roth IRA contributions. You put money in after taxes, but it grows completely tax-free, forever. Every dollar you put in at 20 can be worth $10 by retirement, and the government can't touch a cent of that growth. The earlier you start, the more money you make. Someone who invests a small amount consistently in their 20s can end up with more money at 65 than someone who invests a lot of money in their 40s. Less contributions, early starting point, more money. It's not magic. That's just what time does when you give it room to work. Number 3. Index fund investing. Now, where does the money actually go? Index funds. Not crypto, not day trading. You buy a small piece of the entire market, hundreds of companies at once, and you let time do the work. It's boring, and that's the point. Boring is what compounds. No stock picking, no checking your phone every 5 minutes, no trying to beat the market. You're not trying to outsmart anyone. You're just counting on the economy to grow over decades. And history says that's a pretty safe assumption to make. Number 4. Dividend growth investing. Some investors go one step further. They buy companies that pay them just for owning the stock, and that payment increases every single year. Imagine a paycheck that grows automatically, whether you work or not. That's dividend investing. Quiet income built slowly. Some companies have raised their dividends for 25, 40, even 50 years, even through recessions, crashes, and anything bad that happens. You're not chasing growth. You're collecting a small, growing paycheck year after year just for holding on. It's not flashy. It's just reliable. Number 5. Living below your means while income grows. Here's the one nobody wants to hear. None of this works if you spend everything you make. The real wealth isn't the 401k, the Roth IRA, or the index fund. It's the gap between what you earn and what you spend. That gap is what funds everything else on this list. Get a raise? Your expenses don't need to go up. Get a bonus? It doesn't need a new purpose once you get it. Every dollar of that gap is a dollar that can compound for the next 30 years instead of disappearing on a weekend. Protect it, grow it, never let your lifestyle catch up to your paycheck. 5 moves, no spreadsheet genius required. No luck. Just consistency. But this is only half the picture. Part 2 is for the people who want to go further, owning real assets, real businesses, real estate. Get it? Real estate? Anyways, part 1 was about building the foundation. Part 2 is about building on top of it. Subscribe so you don't miss it. And hit the like button if this video helped you. And I'll see you in the next one.